Thank you for joining us at the North Dallas podcast with Carol Butera and Larry Bammer with One Real Mortgage. Larry's going to be talking about a credit update today, and I am going to go over some of our recent market trends along with providing an update on where we stand in the four markets that I specifically cover here in North Dallas. Larry, what is a credit update? Can you tell us a little bit about that?
Yeah. So if for people that are out there right now and they think their credit score is too low, or it's not where they want to be at to get a better rate, one of our lenders has it's free program where we submit the application and their credit report, and then in 24 hours we get back homework. We get back exactly what it will take, a simulation of if you pay down $120 on your Chase card and $300 on your Macy's card and $50 here, pay off this collection, whatever, like the math. And they'll say, if you do those things, your credit score should improve to this number. And then when you do that, whether you can do it in a week or this is something you're planning to pay off in the next, let's say 30, 45 days. Mm-hmm. Once you have that paid off and you get proof from that creditor that it is, the lender will actually submit it to the three bureaus and do a rapid rescore at their cost. So it's great whether you're in escrow and you're trying to get up to that next tier to get a better rate, or you're at, let's say, 560 and you can't qualify yet for FHA. This is it. Instead of guessing, instead of saying, well, I'm just going to pay off when I can here and there. It's like, no, we're going to tell you an exact plan. Right. Pay off this one, this amount, and this one, this amount. And then you're in a position where you can take them out looking at properties and get them going. So if you're out there, you're watching and you're like, I'm not sure, reach out. We'll have you fill out that loan application. Initially, we only do a soft credit pool at no cost. And then if you're a candidate for credit upgrade, then we can talk about next steps.
So again, just to make sure I understand and our audience does, how immediate is the credit upgrade? Because you said, if they're in escrow or if they're looking to close in the near future, how long do they have to, how much time does it take to get that upgrade?
Yeah. So if you're not in escrow yet, you're just like out there window shopping, trying to figure out what area to be in, then, we're not under the gun. But we actually have people in escrow that we're submitting them for credit upgrade. 24 hours later, we're getting exactly what needs to be paid off. They're paying that off the next day. So that's day 2. Once we have that back, we submit it for a rapid rescore. That takes about 3 to 5 days. So literally in, 7 days, we could have their credit score changed that quickly.
Wow.
We don't even have to wait for that next billing cycle to kick in, which is what a lot of people do. I'll pay it now and I got to wait the next month statement to see it reflected. No, we're doing that as a rapid rescore. We can find out, a week to 10 days. It's as quickly as they can pay off those things, pay down those things, is how quickly we can get that done.
Now, how does something like that help people who have either filed bankruptcy or have had some more severe challenges when it comes to the finances? It's not just one or two things, but they definitely need to get a more improved score to benefit, or even potentially secure.
Bankruptcy is going to be a different animal depending on what chapter 11 and 13, if they're in it or not, if it's been discharged. Like that's a whole nother, for this, if they are needing their credit to improve because they don't qualify at all, they're below 580, let's say, and we're getting them to the point where they can qualify for FHA. That's one reason. But 2, we've had credit upgrade where people can increase their score 60 points, and that's the difference between, maybe a quarter to a half a percent difference in rate. That might say I had one saved him $6,000 in closing costs because it didn't have to pay as much in points anymore. Another one, it saved him a couple $100 a month in monthly payment because they were now in a lower interest rate because of a better credit score. So it can help on many fronts.
Well, a good tool to have.
Yeah.
What's going on in the market?
Well, we Fed Chair Powell spoke yesterday. They're pretty certain they're not. They obviously didn't raise or lower the Fed rate yesterday. In listening to him and in feedback from people afterwards, the assumption is that in March there's probably not going to be a Fed cut then either. We'll see as we get to the beginning of March, if jobs data and PCE does show signs of improvement for what they're looking for, but we're in the right direction. And that's why you're seeing, like we had this week, the 10-year treasury, we were hovering around 4.15. It had ticked back up 2 weeks ago, and rates went up about 1/8% as a result. So now we're back down. I think we were looking in the like 6.05, 6.06 national average for FHA and VA. We're still in the upper ranges for conventional, and jumbo I think is just over 7. But that's everyone's situation is different. Like if you're putting down more, your credit score is better. That might be a different situation, but it's improved. I don't think we're going to see a Fed rate cut until May now. Or at least in March, maybe they'll finally signal how many and when.
So how does this align with the initial 4 to 6 that was anticipated?
Yeah, I mean, if they're waiting until May and then they're going to drop it 6, I mean, that's every week, that's every month almost. I don't see that happening. So, maybe it's down to 3 to 4. I think March's next Fed meeting will be a big deciding factor. I mean, unemployment came out, jobless claims came out today, more claims for unemployment, than expected. And that's where, that plus what Powell said yesterday, got us to the, right now we're at 3.86 for the 10-year treasury. I mean, we were at 4.15 2 weeks ago. So that's a big drop for us. I mean, if I look at going back let's go back 6 months. Let's see. We were at 4.98 in October, and that's where rates were at, 7.5 to 8%. And we're down an entire point for the 10-year treasury now. So we're heading in the right direction. Bottom line is, I think if people are waiting for the rate, when they finally get that rate that they want and they go to start looking at houses, they're going to see, I'm curious to know where we're at right now with days on market, because I'm telling you, once we get down to, below 6 for FHA and VA, and we get to the low 6s for conventional, a lot of people are going to be out buying. That's going to drive up prices and shorten days on market. So right now, I think there's still, maybe a little ability to get something, 30, 45 days in the market, maybe get a buy down, maybe get a seller credit. But come March, April, I think that ship has sailed.
Yeah. Well, if you'd like to know a little bit about how we're doing, we have January end of month for 2024 posted. So I can give a little recap of the 4 areas in North Dallas that I cover. My focal point being a resident, living and working in Prosper. Just looking at days on market, the median days on market, you're looking at 75 days. that's much longer than what we were accustomed to about a year to 2 years ago. So
Yeah.
that's up 38.9%. Now, some of that is having to do with the holiday season and the winter months and kids being in school, all factors accounted for. That's still a long duration. Of the 4 markets I cover right now, Homes and Prosper are staying on market the longest. Next to that is Salina with 51 days. There's no change. So December has been, which you don't see this very often, the same 51 days on market. So it seems to be trending at 51 days. Now, Salina is a little bit different in regards to a lot of the properties that are going. They have a huge builder presence and a gigantic boom happening right now in a couple of the communities. So like Mustang Lakes of Mustang Lakes, they are building. They're still building. So you got a lot of builders as opposed to homes reselling. Frisco, we have tied with McKinney, 35 days on market. So both of those have seen a decrease with the amount of time that homes have been on market. McKinney has decreased by 12.5% from the prior month. So it's trending the right direction, and Frisco the same. With regards to 35 days, we are looking at 31.4, so a bigger decrease there. So that is just days on market. Do we want to look at anything else since I have this up? We have closed sales, new listings.
I think that's helpful to see. Well, yeah, I'm curious. This is in January. People have always been saying, inventory is tight, inventory is tight. What does it look like? I mean, obviously in the wintertime, you're probably not listing your home unless you absolutely have to. So
Right.
now are we seeing a big uptick, or are we going to be next month a little bit more? And then by the time we get to March, April, it's, our peak.
It's pretty interesting to see here. For new listings in January 2024, Prosper had the least, and they're the ones sitting with days on market the longest. So I think a lot of people may be pulling off and holding off based on seeing that long amount of time with 97 new listings. McKinney had a whopping 273, up 19.2%. So they have seen a boom on houses coming to market. Frisco the same with 205, and Salina 142. So in 3 of the 4, people are choosing to put the homes on market because they don't have as large of days on market as Prosper currently has.
I think we're going to see. I think we're going to see more and more inventory pretty quickly coming on. I wouldn't be surprised if the next 2 weeks, we look at February, it's maybe not double, but we're going to see a big uptick, because one of the things that I think people holding off on was rates. When rates were 6, 7, maybe 8, for jumbo and conventional. People didn't want to leave their 3.5% rate that they might have. But now as we get down to the, let's say, 5.5, or maybe they can get 6 and get a buy down to 5. Now people might be a little bit more like, okay, I can afford this monthly step up increase to a bigger house and whatever. So I think as we head in that right direction, we're probably going to see more people, if they're not going to rent out their current house, like, okay, now I can sell it.
Right. Well, now I have something. I found an article in the Texas Real Estate Research Center magazine that I get, and it was saying regarding single family housing and sales for 2024, home sales have not bottomed out, and total sales are expected to remain flat in 2024 compared to 2023 at about 330,000 units. So low interest rates for at least part of 2024 may boost this somewhat. So I think you're right with regards to that comment you just mentioned. New sales will continue to account for a larger than average share of the total sales, around 20%. So we will see.
Yeah.
It's speculation. But it does seem like a lot is around interest rates.
It is interest rates, affordability, and inventory. And I think as inventory picks up, there's more options. It's a little more affordable. Strike while the iron's hot. With days on market right now being a little bit high, that's when you can get some good deals price wise. Like get that permanent buy down, get that temporary escrow buy down. Get that seller credit. To cover a lot of your closing costs. We get into springtime, probably not so much. Maybe next podcast. I think we have a guest coming on soon.
Yes. So episode 3, we are looking to have a relocation and moving company who, more to come, but who is founded by one of our local heroes. And it's a husband-wife team, and they will tell you more. So you'll have to join us for episode 3.
Nice.
Larry,
Well, if you're in the North Dallas area, especially if you're in Prosper, McKinney, Frisco, Salina, what did I miss? I think that's them. And you are a business owner and you want to be featured on our podcast, we'll make room, right? We'll make room right here for you. We'd love to showcase you, what you're doing in the community. If you're a business owner, if you're a professional, you got something to show. So reach out, and you can find either of us. There's our contact info for YouTube at Carol Butera. You can find me at Lender Larry Bammer. Thanks for watching. Any parting comments?
No, I think you're right. We just have to see where things go with inventory. Inventory and rate seem to be the focus. But that's a great credit upgrade. Good tool to have.
Yeah. Hey, thanks for watching. Thanks for tuning in. And we'll see you on the next episode.